There are a lot of different actors that held on to some Bitcoin in some fashion or another. Now the process begins in terms of establishing the reserve, the actual infrastructure behind it, and getting all of that accomplished. There's nothing in the EO that mandates that report become public, but we could choose to make it public at some point. And we are certainly keen on the idea of accumulation. We've stated publicly that Bitcoin is digital gold. We believe it's in the best interest of the United States to garner as much as we can possibly get. I've said that at every conference that I've spoken at in the last 2 to 3 months. Now, obviously, this has to be done in budget neutral ways that don't cost the taxpayer a dime. The president was clear about that in the executive order. But I think we have some very creative minds, 2 of which are sitting up here with me. And I think we'll begin moving very quickly on that.
So the Genius Act, are you a fan?
Yeah, I think, look, I've been saying this for years. Without action by Congress, the crypto market, whether it's the stablecoin bill, you mentioned market structure, is unregulated. It's growing. It's a growth area. There's a lot of interest by retail investors, a lot of interest by institutional investors who are remaining on the sideline. And I think from a customer protections, market resiliency standpoint, it is better that we start moving towards a regulated market. It's imperfect. It's still working through both the Senate and the House before I think it gets to the president's desk. But ultimately, it does bring in the stablecoin issuers within the remit of the banking regulators. And that transparency, I think, is going to be really important, not only for the health of the treasury market, but also for the health of users who want transparency and understanding of how the market's being regulated.
Does it do anything to advance the debate over regulation for other cryptos?
Well,
that's what you were very involved in.
Yeah, it's interesting. As a former market regulator, I was very focused on the market side of things. There are multiple sort of legs to this stool. Stablecoins are a significant leg to the stool. And the fact that it was moving forward, I think, is a very positive step. The next move is the market structure side of things. And as you pointed out, I did testify on Tuesday. There's a bill on the House side that has moved out of committee. So I think now the conversation has turned to market structure, which would give both the SEC and the CFTC authority to regulate the centralized exchanges and perhaps even DeFi, decentralized exchanges, in the future.
Is the industry pushing back on that?
No, the industry, I think, is supportive of a thoughtful approach. And I think for them, it's an opportunity to really gain credibility, but also get certainty. They're working in an environment in the U.S. where they don't truly understand what the rules of the road are. I think from a former regulator standpoint, my issue was always I don't have the tools to regulate bad actors and to identify fraud and manipulation. So I think there are 2 wins out of this, both legitimacy and credibility and clear rules of the road so that folks can grow and innovate and develop products. But also for the regulators, both federal and state, it's visibility into what's going on so that we can police and enforce the market. Because inevitably, there will be bad actors. We've seen that a lot over the past couple of years, and we need to root that out so the good actors can grow and have some certainty. Well, I think, look, competition is going to arise as this bill is passed. It has passed 2 houses of Congress. It hasn't been signed yet. But this was always an argument I faced talking to members of Congress. If we pass bills around crypto, it legitimizes this industry. And at a time in 22 and 23 when you had rampant fraud, big in scale, I think a lot of members in Congress were questioning why would they legitimize an industry that is so rampant with bad actors. But ultimately, in the balance between an unregulated market where investors are getting hurt and legitimizing an industry, my take was we need to put regulation and guardrails around the industry. So you will see the companies that are involved succeed. They will grow because you will then have money on the sidelines that now feels more confident investing in the space.
Just now, because it really isn't rallying despite a lot of inflows and despite what this market's doing. What's up with that, Tanea?
Yeah, Scott, $4 billion of inflows into Bitcoin ETFs this month, but the price of Bitcoin itself only up about 3% in that same time. So there's a missing piece here. We talk so much about the buyers. There are the sellers, which are these mega whales who are likely Chinese miners. We have data from CryptoQuant showing that while ETFs and corporate treasuries have been big buyers this year, that's mostly being almost perfectly offset by the selling by bigger whales. So check out buying from wallets with 100 to 1,000 Bitcoin. Those are likely the ETF wallets as well as corporate treasuries. versus selling from the over 1,000 Bitcoin and over 10,000 Bitcoin cohorts. So this, Scott, is one reason Bitcoin's price is stuck. It's evidence of a big shift in ownership in the Bitcoin market. Retail, so under 1 Bitcoin, for what it's worth, those are sellers too, but they're kind of an insignificant cohort at this point, unlike in previous cycles. And it could mean we see traders adopting more sophisticated options-based strategies or turn to proxies and treasury companies for their Bitcoin returns. Scott?
What you just said, I think, is powerful. Revolutionary is what we're talking about with the Genius Act. And the next iteration, the market structure, I think is incredibly important as we talk through those market principles and look at the Clarity Act. But if we get just the Genius Act right, it can have powerful impact. But for the market to function completely, we need both. And that's why I think it's important from my perspective as the guy that will at least guide be part of the glide path for the market structure to come to fruition. I want to set a timeline, Cynthia, or I should say Senator Chairwoman Lummis, of seeing the market structure completed before the end of September. I think that is a realistic expectation. Don't you think so, Senator Lummis, Chairwoman Lummis?
Well, yes, sir. You're the chairman, and we will do as you wish. We will make sure that we're ready to do that. We put out the guidelines for a framework of the overarching principles in a market structure bill. We had a hearing on it this week. We will take those guidelines and work with legislation that was drafted in the House, as well as the Lummis-Gillibrand bill that has been out for 4 years. And we will sift through the principles of both that adhere to our guiding and overarching principles. We'll have a bill draft that we can hopefully put out before the August recess, then mark it up in September and have it where you want it.
Great.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have Bohan speaking about the government accumulating more Bitcoin. And we know the government gets their Bitcoin for free. And remember, the Crypto Teacher told you. And we have the old CFTC chair playing the Hegelian dialectic. And remember when he was in office, the SEC and the CFTC would just keep kicking the can to each other, saying they don't know which one is going to regulate. But we know he was working with the bank man. And he talks about stable coins and this crypto industry. And now is ready to bring to the people. And before, it was too many bad actors. But guys, if you look at the stock market and the industry, it's going to have bad actors. That's the reason why you make the rules. They didn't want rules because we know the banks are the biggest what? I'll let you finish that. We know the whales were definitely taking advantage of these pumps and dumps and pulling these rugs. And remember, the Crypto Teacher told you. And we have CNBC asking why haven't Bitcoin rallied. Bitcoin is acting like a normal asset. You're going to have buyers and sellers, but we also know liquidity pumps Bitcoin and crypto. The masses have not yet come into the space, and then also the big banks, even though they're using the technology, has not bought on the masses. And remember, the Crypto Teacher told you. But they had a nerve to blame the Chinese miners for the selling. Guys, you can't make this stuff up. And we have the tariff deadline next month. How quick time is flying. That's why I keep saying 2 to 5 years is nothing. But we know they're going to ride these tariffs to the 4th industrial revolution. And remember, the Crypto Teacher told you. And the banks are coming to get it all. They don't want you to have nothing. You own nothing, but you will be happy. They want to bring private assets to 401k. Yes, you heard that correct. And think about if you put that 401k in real estate, at the prices is at now, and that real estate plummets, guys, you're going to have nothing. And remember, the crypto teacher told you. And all they're going to tell you is that you knew the risk. Now we have home sales down, and eventually, guys, prices are going to come with it. I don't care where you live at. These houses are just sitting, not moving, not 1 inch. And the ones that have good equity in it, the corporations are snatching them up with cash so fast, the average person doesn't have time to buy it. And remember, the crypto teacher told you. And we have GDP was negative, but got even worse. Guys, you can't make this stuff up. Now, I want you to remember something, and remember the crypto teacher told you first, if we go 2 quarters negative GDP, that is considered a recession. We're going to see how they spin it, but they made no news today, and the stock market should have tanked, but it didn't because it was ran by an algorithm. It definitely should have pulled back big, and the economy is only going to get worse as we move on towards the end of the year and next year. Yes, we have the Trump big bill coming through, but it's only going to benefit certain sectors. And remember, the crypto teacher told you. And we have the dollar weakening, and global investors are moving their money to the emerging markets. And how many times has the crypto teacher told you that this was going to happen? And the mainstream media is not talking about it and not telling the masses not one word. But the big money is moving away from the United States and over to the emerging markets. Why? Because it has more upside. Is this common sense? And what does the crypto teacher teach you? That's right, follow the money. And remember, the crypto teacher told you. Because he knows when it comes to the NWO, it's all planned out. Y'all have a wonderful day.
The deadline is not critical. The president can simply provide these countries with a deal if they refuse to make us one by the deadline, and that means the president can pick a reciprocal tariff rate that he believes is advantageous for the United States and for the American worker, and he will continue to do that. Welcome back. A big change could be coming to your 401k after a push from Washington to Wall Street to bring private assets to the masses. Our Leslie Picker has the story for us. Morning, Leslie.
Hey, good morning, Sarah. Obviously, this is very much in focus in the alternative asset world. BlackRock just this morning making a push out with a paper describing their plans for putting more private assets into 401ks. The firm intends to offer a target date fund with as much as 20% allocated to private assets by the early part of next year, I'm told. The firm estimates that incorporating private equity and private credit into a 401k will deliver 15% more income over 4 decades, and that's before fees. Washington is entertaining this concept as well. This week, the House advanced a bill that broadens the so-called accredited investor status, which would allow more people to invest in private markets through their 401ks. And there have been recent reports about the Trump administration's expected plan to issue an executive order that directs federal agencies to study and propose rule changes involving private assets in retirement plans. Now, there are still sizable hurdles among plan providers, including high fees, illiquidity, opacity, and litigation risk. BlackRock says in its paper that it's possible to offer exposure to private assets with a competitive fee structure that meets clients' needs on liquidity and transparency, and that a lot of the structuring would require products that are essentially built specifically for 401ks to address these concerns. On the policy front, BlackRock says the biggest hurdle is that the litigation landscape, as more than half of the defined contribution plans with more than $1 billion in assets have been sued for excess fees. Scott.
The others have been, really. Diana Olick is here with the details. Diana? Well, Kelly, pending home sales in May rose very slightly, but they're still running at an extremely low level. Just for perspective, the pending sales index is hovering just above the lowest level in 24 years. It's only a tiny bit higher than it was in April 2020, that 1-month plunge during the pandemic shutdown.
Now, GDP is hitting the wires, and what's interesting here is this is the third time around the block on first quarter GDP. The number initially was meant to be -0.2, and it really did shift dramatically down 0.5%. And this all has to do with imports, exports, and all the issues that were going on trying to get ahead of the tariffs as everyone's trying to figure out what's going on with tariffs. I'm not sure anybody has figured out what's going on with tariffs. And minus 0.5% would be the weakest GDP going all the way back to the first quarter of 2022.
No, we do, for sure. We do expect that growth is going to decelerate. I mean, that's just a natural happenstance of understanding that, insofar as trade barriers are concerned, they're certainly higher now than they have been in quarters past, which does tell us that at the margin, growth is going to slow. Now, the question for us is whether or not it's going to slow enough to tip the economy into potentially a negative quarter for growth.
Let's have a look at the US dollar because that has been a story over the past year and more. The currency edging up today, but it over the past couple of weeks has been hitting multi-year lows.
Yeah, and this has been going on for a while. And if you go back over time, love to study market history. When the US dollar starts to weaken, it generally means that global investors are willing to take a little more risk, and they are investing in things like emerging markets for the first time.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told told his members that this has been part of the reason here that the system is kind of clogged up, if you will. During that auction that we saw a little bit before, the attack had prevented ICBC, according to the Financial Times, from settling treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of treasury markets.
Now, it was not just a poor auction. It was absolutely lousy. And you know, when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books, is time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate. Not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Tam save the village. Part 2. King Joshua and Drama Tam save New York from COVID Stories 3. Part 3. King Joshua and Drama Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.